What's up, everybody? This is Dr. Nick with Leverage Media, and welcome to another episode of Path to a Million podcast. So I've been just kind of like searching around for any kind of information. There was this trade organization that lobbies Washington that it's called like the National Association of Government Guaranteed Lenders, I think. Somebody had sent me an email from their CEO, and he seemed like he was kind of in the know because they're actually in Washington and they're lobbying Congress and the SBA. And so I went to their website, which if you guys want to go, it's the 𝗵𝗃𝗿𝗄.org. And I was like, you know what? They have like this update on their front page. I was like, I'll keep an eye on that and see if they'll probably be the first ones to know if there's any kinds of updates with the SBA. So I was watching some other interview, and someone mentioned the Treasury website, and I was like, yeah, I should look at the Treasury website. So I went to the Treasury website, and they have a COVID-19 Paycheck Protection Program page with some different documents on it. And one of them said, let me see what it actually said. So if you go to Treasury.gov and you go to the, it says like in the CARES Act, it says assistance for small business. At the very bottom, it says Paycheck Protection Program interim final rule. And I was like, oh, I haven't heard about that before. And so I opened it up, and it was like a 31-page document. And so I started reading it, and there were some things in there that I hadn't read before. Like the document that came out on Wednesday said that it was going to be any money that was not forgiven in the loan was going to be 0.5% for 2 years. Well, this document says 1% for 2 years. And I'm like, this is either older than that, the 0.5. This document's either older than the 0.5 document, or it's newer. And so I looked at that website I told you about, the 𝗵𝗃𝗿𝗄.org, and they hadn't updated anything. So I just assumed that this had been out there for a little bit. And then I just refreshed the 𝗵𝗃𝗿𝗄 website, and it turns out this is they just posted on their website. So I had it before they did. That this is basically like the final rule that the banks will have before tomorrow. And unfortunately, this does not give a whole lot of like answers that we didn't really have before. So I posted a video a little bit ago that said that independent contractors do not count towards your payroll calculations. Like, so when you're qualifying for the money, the independent contractors do not count. They can do it on their own. So the way that it'll work is the 1099s that you have, you're going to have to help them get the information. Theirs will be very simple. It'll basically be like, here's the 1099 I have. They probably don't have any rent or whatever, but they're going to have a 1099 that they take in, and they can qualify for 2.5 times of what their average monthly was over the previous 12 months. So now that I know that this is a brand new document, I'm probably going to reread through it later tonight. There wasn't a whole lot of stuff that was different, but there were a couple things that jumped out. One was interesting in the, so there's 2 sections. There's like what borrowers need to know, like us as the business owners, and then what lenders need to know. So I read the what lenders need to know. So this one was interesting. It said, let me see what the actual like category was before I read the subcategory. It's just the what. So who is eligible? What do lenders have to do in terms of loan underwriting? Let me see if I can. Okay, oh, here we go. So the question is, can lenders rely on borrower documentation for loan forgiveness? The answer is yes. The lender does not need to conduct any verification if the borrower submits documentation supporting its request for loan forgiveness and attests that it has accurately verified the payments for eligible costs. The administrator will hold harmless any lender that relies on such borrower documents and attestation from a borrower. The administrator, in consultation with the secretary, has determined that lender reliance on a borrower's required documents and attestation is necessary and appropriate in light of Section 1106 of the Act, which prohibits the administrator from taking an enforcement action or imposing penalties if the lender has received a borrower attestation. So basically, like regular language, what this means is that when you go for the loan forgiveness, the Treasury Department cannot hold the lender liable for believing, you know, what you gave them. They don't have to do any form of verification. I think that the Treasury is going to be so overwhelmed with the amount of applications with this. The SBA is going to be overwhelmed. The Treasury is going to be dealing with a continuing economic disaster. So I have a feeling that they're going to determine, or they're going to be depending on the banks to you know, verify this. So here's what I have gathered from reading this is that, and I've got one other thing that okay, there's one other thing about like paying people to help you with this application that I think is important. The way that it seems like it's written is that I thought that when they came out with these rules, they were going to be very specific on you need to have, you know, like a roster of people, because people have been asking me, well, what if I wanted to get rid of somebody like before all of this, and now I want to replace them with someone else? Would that work? I was always like, well, like the point is that they want everybody to stay employed. They want to make them, want them to make 100%. So there's a world in which they don't really care that much, because when they talked about the loan forgiveness part on the borrower side, it seemed like all they needed to see was how much did you spend on payroll? Can you prove that you spent this money on payroll? It didn't say anything about like listing out the individual people that you paid it to. How much did you actually pay each individual person? Because the bill is written to try to keep each individual person at 75% of their actual pay. This is kind of written to where they just want you to pay the money that you would have paid otherwise to your payroll costs. And then they also want, in the Wednesday document, they kind of said, maybe we're going to make it to where you can only use 25% on non-payroll costs. These rules put that in stone. So you can only use up to, like if you get $50,000, or let's say $40,000, number's easier. So if you get approved for $40,000, only $10,000 is going to be able to be used for non-payroll costs. So like rent, utilities, interest on business loans, mortgages, those things. One of the things that was not in the document on Wednesday was the interest on business loans. That is back in these rules. So it looks like if you have, you know, leases or business loans just in general, that the interest on those during the 8 weeks will be covered. Another thing, or actually let me say this real quick about the this part. Who pays, so the question is, who pays the fee to an agent who assists a borrower? So there's all these people that are out there trying to charge you $1,800 to do the application for you and gather the information for you. Maybe your CPA is offering to do that and charging you. So this is important. Agent fees will be paid by the lender out of the fees the lender receives from SBA. Agents may not collect fees from the borrower or be paid out of the PPP loan proceeds. The total amount that an agent may collect from the lender for assistance in preparing an application for a PPP loan, including referral to the lender, may not exceed 1% for loans of not more than $350,000, which is 99.9% of us. But for the big dogs out there, 0.5% of loans for more than $350,000 and less than $2 million, and 0.25% of loans for at least up from $2 million, basically up to $10 million. So if anybody's out there trying to get you, or real quick, the Act authorizes the administrator to establish limits on agent fees. The administrator, in consultation with the secretary, determined that the agent fee limits set forth above are reasonable based upon the application requirements and the fee that lenders receive for making PPP loans. So the lenders get 5% of whatever your loan amount ends up being. So that's what incentivizes them to do these. So the if you did qualify for $40,000, the bank would get $2,000 for doing it. The agent that helps you with it would get $400. That'd be 1% of $40,000. So I think that's an important one for some of you that may have been reached out to or maybe have contracted with an agent that might be looking to help you with it. So they can't charge you. So you could have them help, and then when they try to give you a bill, be like, you got to talk to the lender because your money comes out of their fee, not out of my pocket and not out of my PPP loan proceeds. So that is an interesting one. The other one was, I'm going to try to find it really quickly. This is a really important one actually, because everybody has been wondering about this EIDL stuff and the 10,000, and they're very clear in here about these situations. I sure wish they'd be very clear on a lot of other situations. Okay, so how can PPP loans be used? So it talks about payroll costs, healthcare benefits, mortgage interest payments, rent payments, utility, interest payments on any other debt obligations, and the last thing says refinancing an SBA EIDL loan made between January 31st, 2020 and April 3rd, 2020, which is tomorrow. If you received an SBA EIDL loan from January 31st through April 3rd, so if you've already gotten it, you can apply for a PPP loan. You can. If your EIDL loan was not used for payroll costs, it does not affect your eligibility for a PPP loan. If your EIDL loan was used for payroll costs, your PPP loan must be used to refinance your EIDL loan. So I'm going to say that again. If if you've already gotten EIDL money, most of you haven't, you've just applied for things. But if you have, if your EIDL loan was not used for payroll costs, it does not affect your eligibility for a PPP loan. If your EIDL loan was used for payroll costs, your PPP loan must be used to refinance your EIDL loan. Proceeds from, and this is another important part, proceeds from any advance up to $10,000 on the EIDL loan will be deducted from the loan forgiveness amount on the PPP loan. So this is really important for people that were wondering, can I do the disaster loan and can I do the PPP? The answer is 100% yes. This is the Treasury rules that the banks will be working off of starting tomorrow. So basically depends on what you've used it for on whether you need to refinance that money into the PPP. And they actually have a calculation of how to, and I posted the document. Let me see where they show different examples of how to calculate your, the amount that you qualify for. So it starts on page, so it says, on page 8 at the bottom, it says, how do I calculate the maximum amount I can borrow? It gives you 5 steps of how to do that. And then they give, looks like 4 examples all the way through page 10. And one of the examples is, if you had an EIDL loan, if you have employees that make over 100,000, The thing that is disappointing about this is that they did not clarify what documents could be used for the payroll costs. So here's what it also says aggregate, okay, how do I calculate the maximum amount I can borrow? Step 1, aggregate payroll costs from the last 12 months for employees whose principal place of residence is the US. Step 2, subtract any compensation paid to an employee in excess of an annual salary of $100,000 and or amounts paid to an independent contractor or sole proprietor in excess of $100,000 per year. That makes no sense because they specifically say that you cannot use independent contractors in your payroll calculations, so that is weird. Step 3, calculate average monthly payroll cost, divide the amount from step 2 by 12. Step 4, multiply the average monthly payroll cost from step 3 by 2.5. And step 5, add the outstanding amount of an economic injury disaster loan made between January 31st and April 3rd, less the amount of any advance under an EIDL COVID loan because it does not have to be repaid. So that'll get subtracted from your loan forgiveness. So that's on page 8 of that document that I posted in the Dr. Nick Silveri page. So it's the Treasury document. These are the final rules that were put in place as of maybe 30 minutes ago. And I'm going to read this. This is not very helpful because it's been in all of the documentation, but it says what qualifies as payroll costs. Payroll costs consist of compensation to employees in the form of salary, wages, commissions, or similar compensation, cash tips or the equivalent, based on employer records of past tips or in the absence of such records, a reasonable good faith employer estimate of such tips, payment for vacation, parental, family, medical, or sick leave, allowance for separation or dismissal, payment for the provision of employee benefits consisting of group health coverage, including insurance premiums and retirement, payments of state and local taxes assessed on compensation of employees, and for independent contractor or sole proprietor, wage, commissions, income, or net earnings from self-employment or similar compensation. So they're saying for an independent contractor or sole proprietor, that's how they would calculate their payroll costs. So let's see, man, but there's nowhere in here where it gives you some like list of documents that can prove. I want to say there was something in here about, let's see, eligible. You also, if you're a felon, you're not going to be able to get anything. If you're under indictment, if you're on probation, I mean, most chiropractors, I think, are, you know, their license. You wouldn't be able to get a license if you had these things, but there's a couple of things that wouldn't allow you to get it. Let's see here. Am I eligible? Okay, so you are also eligible for a PPP loan if you're an individual who operates under sole proprietorship or as an independent contractor, or eligible self-employed individual. You were in operation on February 15, 2020. You must also submit such documentation as is necessary to establish eligibility, such as payroll processor records, payroll tax filings, or Form 1099 MISC, or income and expenses from a sole proprietorship. For borrowers that do not have such documentation, the borrower must provide other supporting documentation, such as bank records, sufficient to demonstrate the qualifying payroll amount. So this is the part where it is just, SBA intends to promptly issue additional guidance with regard to the application of affiliation rules. I don't think that matters for us. So yeah, it's still as vague as it always has been in terms of what's going to qualify for distributions. I had a lot of hope last night with that document that was shared with me that a bank COO had put out. He told her that it had come from the SBA, so I was hoping when these types of rules came out that they would be, you know, here are the list of documents that you can use to show pay, but this document itself does not have it. So let me, all right, so now I'm done with that. Let me go through this. Let me pull this up on my phone because I can't do it on my computer. Hold on 1 second. And just an update on banks right now. You know, most of you that have spoken with your bank, the banks, like, this is basically the guidance they got. Maybe the SBA gave them some specific guidance. I'm going to reach out to my friend who's an SBA specialist and see if he's heard anything. They were supposed to have a webinar, like a call that the SBA was going to give direction to these SBA specialists at the individual banks, and it got postponed today. So it was supposed to be at 2 o'clock today. It got postponed and like not rescheduled. So he didn't really know when it was going to be rescheduled. So we'll see what the, I'm going to reach out to him after this. I'll keep you guys up to date. All right. Let's see. Gregory McCoy, when considering payroll for my part-time employees, how many weeks should I go back to average their payroll, being that they aren't working, but I am still paying them? 8 weeks or more. So the way that you, the way that you're determining what you qualify for is going to, according to this, is the previous 12 months. In the document they put out on Wednesday, it said 2019 documentation. So I'm telling everybody to just get together all your payroll, whether it's part-time, full-time, whatever, get that together from January 1st, 2019, all the way up until the day that you apply. And then the bank will figure it out. Ed Lauterbach got an email from BB&T and SunTrust. They are on board. Only corps, etc., can file tomorrow. Yeah, so every bank is going to have their own thing. A lot of banks are prioritizing customers over non-customers. Someone sent me something today that, you know, some banks are prioritizing, or like the SBA is prioritizing people that already have SBA loans, I think, because maybe they've already been approved for it, like been approved in the SBA process. So maybe it's easier for the banks to underwrite them. But honestly, I think everybody's just kind of like making things up right now until they get more clear. Even that, what I just told you about, like this Treasury document, it's 31 pages. It does not, I could write 300 pages on just the questions that you guys have asked me in one tiny little industry. Jeff Banis, what about us PLLC who do not pay themselves a monthly salary, have no employees, show maybe small 10K profit for the year, but we are a business and have rent. All I really want is to get rent covered. Thoughts? Yeah, I think you're going to be you do not pay a monthly salary, so that's not going to help. You show maybe small 10K profit. Your best case scenario, in my opinion, is going to be that you'll be able to maybe use that 10K profit as, you might be able to show that as pay. You would divide that by 12. So let's say it was 12K profit. You divide that by 12. So your average monthly payroll would be $1,000 basically, and then you multiply that by 2.5. So you have $2,500 to pay your rent over 8 weeks, and that's your best case scenario. That I have no idea if that's actually going to be able to do that. Where is the document you're referencing? It's on the Treasury website. Let's see if I can. I'll put it in the, see if I can put it in the chat here. There we go. Let me see if I can pin that to the top. I can't do it. Anyway, you guys can see it. Let's see. So not owner's distribution, Elizabeth Boost. It's just as vague as it always has been, and I think it's going to be. We'll find out. Like when we go to these, the problem is if we go to. This is the situation that I think that they're really going to get screwed on, and it's going to screw a lot of people. Not so bad. Not, like worst case scenario is you end up with a loan with a 1% interest at the end of it. But here's kind of like worst case scenario in my mind. Your bank, who has no direction from the SBA right now, unless they're getting something separate from this, they say, yeah, sure, your owner's distributions count, right? And so you qualify up to the $100,000. That gets calculated in. You get an extra, so if you basically got $8,000 counted for you as an employee, that means that you would get $20,000 extra on qualified, right? Now the $20,000, you're gonna, let's say you use it, let's say you pay your mortgage, let's say you pay your personal expenses because that's the money that you live on, right? So you use that $20,000 over the next 2.5 months for stuff in your personal life, not just for your business, but in your personal life. Then at the end, they come and they say, oh, owner's distributions don't count. We're not going to forgive that. That's the part that I think people are really going to be pissed about if that happens, because then you're going to get, again, you got the money. It basically was loan money that you used for 2.5 months to get you through a tough time. If you don't use it, you can just give it back to them. But if you use it, you're going to have to pay that back in 2 years at a 1% interest rate. So that's kind of like, I think that's kind of a worst case scenario for most of these situations. But from the sounds of these rules, the forgiveness part is going to be completely up to the bank. So if the same bank approved you, if ABC Bank approved you for your owner's distributions, then, theoretically they would, as long as you can show that you paid yourself with payroll, Like for me, like if I get approved for these owner's distributions, like up to like 8K a month, I normally make 2K a month in my payroll, but then my owner's distributions brings it up, obviously. So what I'm going to do is if we do get approved for that, I'm going to pay myself the 8K a month out of the payroll so that I can show a document to them at the end that says, here, look, I use all this money for payroll. Because the way that that Treasury document sounded was that at the end of this, they're just going to look at like a report of like from your payroll, did you spend it on the money that you were supposed to spend it on? So I don't know. I'm a little bit frustrated because I was hoping that there would be more guidance on this particular thing, because that's what everybody that's a chiropractor that's like an owner operator wants to know about. Edward Williams, I'm a healthcare provider with a business structure of an S Corp. As an S Corp, I am my only employee. I don't have a payroll, but I have been paying myself from the S Corp. When I file taxes, I file 1120 for my S Corp and a 1040 for myself. When filing for PPP, should I do it as an S Corp, but I don't have payroll, or an independent contractor? Thank you for your time. Well, if you have a 1099, I don't think it really matters how you file, whether it's an S Corp or an independent contractor. If you filed as an independent contractor, I would guess you would need a 1099 from someone that said, Edward made X amount of dollars, here's my payroll information. The video I made last night, the 1120 form was one of the forms that they were thinking that you were going to be able to use, which I'm still hoping. We haven't heard anything to the contrary yet, but we haven't heard anything to like say that that's actually fact. So your best case scenario is that you'd be able to take that 1120 in as a payroll cost, and then you would qualify based off of that. But this is the unknowns of like, what are they going to use to qualify as payroll? Let's see. Gerard, can we include annual contribution to Safe Harbor as payroll? I don't know what Safe Harbor is, but if it's some type of retirement community, I would bring it in. And I would, again, I think a lot of this is going to come down to you just like arguing your case. Like each bank, if they have no guidance, they may, like one bank might say yes to this and another bank may say yes to that. And then when you go for the loan forgiveness at the end, you're going to be going to the same bank and the same banker that gave you the money for the qualification. And I have a feeling that the Treasury oversight on this is going to be almost nil, unless they give them very specific things that they're saying are going to be forgiven for. But from this document, it's basically like, hey, as long as you use the money for payroll for at least 75%, so if you get $40,000, you have to spend at least $30,000 on payroll. But it does not seem like it's going to be as specific as I thought it was. I thought it was you were gonna have to like keep the same people on board at the same pay. But the way this document says is you're gonna have to like show that you spent the money on payroll, and then it's gonna be up to Joe Schmo, the local banker, to decide if you abided by the rules or not. And if he thinks you abided by the rules, then he'll stamp it forgiven. The Treasury Secretary or the Treasury is not gonna care, because they're anticipating giving all this money away anyway. And it's like, I don't think that there's going to be any oversight outside of the banks themselves. So what you've got to do is you've got to talk to your banker about what is it that they're going to allow. And then again, it literally might be like, can you talk that banker into taking that 1120 form? If you can talk that banker into taking the 1120 form, he's going to be the one that decides what you qualify for. If that's in the calculation, then you qualify. And then at the end, if the Treasury hasn't given any very specific directions and you say, look, I spent it the same way that I spent it before when you qualified me, now it's time for forgiveness, they're going to be like, okay. I mean, if Treasury doesn't come up with any other rules. So that would be my recommendation is argue for as much as you can, keep documents so that you get things. Brooks Laser, what's up, brother? If you guys need any custom, well, I don't even know if they're custom cabinets, but you glue shit onto cabinets or something. I don't know. All right. let's see, Kathy Field, did they say we had to have the 2019 taxes done then for sure? Can we go off they literally have not said what documents are going to be used. Yeah, so that's the disappointing part, is they don't really say what the documents are that are going to be qualifying as payroll. So again, I would just bring in whatever you got. If you can get your 2019 taxes done, you know, in the next couple of days, it might be worth doing. But if not, I would just bring in, you know, whatever you have to prove it. I hope the 2019 taxes are not the necessary part, because mine still aren't done. So Brett, been dealing with my bank for 2 days prepping. They are pulling out. OMG. Yeah, it's not great. Like the problem is that the banks, I was talking to my bank today, the thing that they're pissed about, they're pissed about is that it was supposed to be like, if the loan didn't get forgiven and it turned into an actual loan, that the act itself, the bill had up to 4% is what they could have charged, and they could have done a loan repayment term of up to 10 years. Well, the banks are sitting there like, all right, they get their 5% for doing it, their like transaction fee, but that's a one-time fee. The bank makes their money on long-term interest. They make their money on 30-year mortgages. So when they found out on Wednesday, the document said 0.5% for 2 years. These rules it looks like they changed it to 1% for 2 years, and but that is not enough money to keep like a banker interested. So if it's not worth their time or their effort, I mean, all of these banks are like pulling all of their resources into this one thing, and if it's not worth it, they're just going to be like, I don't want to do it. Right? Because they are going to be inundated for the next 2 months with the most unsavvy business people in the world. Like, businesses are used to dealing with like people that make $5, $10, $100 million. Those are like their ideal customers. Us that make, you know, $1 million or less dollars are just like flies. They like are just a waste of time. There's not enough money to be made to like really like worried about like what we need. So it is, man, tomorrow is going to be interesting for sure. Like, I'm going to reach out to the SBA guy at my bank after I get done with this and see if he got any more insight beyond this Treasury document. But yeah, I think there's going to be a lot of people like Brett that have been prepping for 2 days and then their bank pulls out. The good thing though is that the stuff that you've been prepping for that bank, is probably going to be the same stuff that you can utilize for another bank. So it's probably not the end of the world, but it's going to be, the thing that sucks is that if you don't have a banking checking account, like if you go to Bank of Springfield right now, my bank, they're going to say, well, we'll get through all of our customers first, and then we'll get to you, Brett, because we don't know you. Like, we'll help you out, but we got to take care of all these people that we have a relationship first. So if more of these banks stop being willing to do it, then there's going to be a lot of people left out in the cold. And in there was one thing that I saw in there. It says, is this a first come, first serve policy? And it's just one word, yes. So, you know, when this $349 billion, and I was reading an article today, they think that could last for a week or two. They'll probably go back to Congress. Congress will probably, I mean, there's nothing that's more bipartisan than helping small businesses. So they'll probably pass more money, but how many times will they pass money? You know, the restaurant chains that have 10,000 employees, those places have accountants and lawyers working to get everything ready. They've got great relationships, obviously, with the bank. They're going to be first in line, and they're the ones that could make it 6 months if they had to. You know, small businesses are the ones that are gonna, and this is part of the reason why I could move all my business over to Chase, but I like having Bank of Springfield as my main commercial bank, because it's a local bank. You know, my banker is my friend from college. The SBA specialist is a guy I've known for 10 years, and so, you know, all those beers we drank together are hopefully going to pay off in a situation like this. Elizabeth, Brett, my bank said they are waiting until next week due to too many questions. That's what a lot of people are talking about, that a lot of the banks are just like they're just waiting for guidance. Like, it's unbelievable that they have this thing going live tomorrow and they can't even tell people like what documentation is going to qualify for payroll. It's nuts. Brett, what I've heard, if your bank is saying they're waiting till next week, they are out choosing not to take the risk. That could be true, or they could just be waiting. So, Tom Nataro, is the loan amount based on average payroll plus 1099 total for 2019? So the thing, the language in this document, I think it's the prior 12 months which is what I originally thought was it was the 12 months from when you apply for the loan back. The thing on Wednesday said that it was going to be 2019. So I'm telling people to bring everything from January 1st, 2019 to the day they apply. And for the 1099, I made a separate video because I thought this was just like some document that happened to be on the Treasury website. I didn't realize that I found it like the minute it went on there. So in there, it says specifically that independent contractors, 1099 people, do not qualify for your payroll calculation. But then in the steps that I just laid out, let's see if I can find them again. The steps that they give to on how to calculate what you qualify for, I'll read it again. Let's see if I can, oh, here we go. Let's see. Okay, step 1, aggregate payroll costs from the last 12 months for employees whose principal residence is in the U.S. Step 2, subtract any, this is the part where it says independent contractor. Step 2, subtract any compensation paid to an employee in excess of an annual salary of $100,000 and or any amounts paid to an independent contractor or sole proprietor in excess of $100,000. Now, actually, now that I reread that, what I think it's saying is that for you, the person who has employees, that you're only going to be able to count your W-2 employees. I think the second part of that question is if you're an independent contractor or if you're a sole proprietor, you need to subtract anything in excess of 100,000. So they are very clear in a different I think I said it was on page 10. Here it is. On page 11, it says, do independent contractors count as employees for purposes of PPP loan calculations? No, independent contractors have the ability to apply for a PPP loan on their own, so they do not count for purposes of a borrower's PPP loan calculation. And then it says the same thing on the forgiveness side. So independent contractors are not in that calculation for you. Here's why I keep like trying to give you guys as much like facts as I can find, as opposed to like I can give you my analysis of what this stuff says. Like I've read a lot of it. I've talked to a lot of people about it, but until they're like, the only things that matter are what the SBA or the Treasury say. And what I don't want you guys to do is I don't want you to do all these calculations that are incorrect, because what's going to happen, who was it that was telling me this earlier? I think I was talking to somebody earlier that basically said that if, or maybe it was an article I was reading, that if you have your application all together and they find errors in it, you're just going to the bottom of the pile. They're trying to like process things through easily, right? That's why from the beginning I've been telling you to contact your bank, get the appointment on Friday, which turned out to be the right day, and also have them tell you, as I thought they would know earlier than this, what their exact application process was, so that you could gather up all the information. And then as rules came out, you know, I've been trying to, but they just haven't like really like given us that much information. So it's been, you know, it's been frustrating, but you don't want to go in there, have your application be wrong, then be like, okay, I'll go fix it, and then get to the back of the line, right? So this is why these rules are really important. Brett, why with the disaster loan we could go through the SBA directly, and with the PPP grant they made us go through the banks? Because it's not a grant, it's a loan. and it's not an existing thing, and they were trying to get it out fast. And if they had every single small business go for free money to the SBA, the thing would crash. So, so yeah, they were hoping that this would be an easier distribution route, but where they screwed up is they didn't give they didn't give enough money to the banks to make it worth their while. So they should have given the 4% at the 10 years repayment loan, and I guarantee you every bank would be lined up to do it. Right, and then the money might be gone, correct. Jody Notaro, what do they base your loan amount, average 2019 payroll plus 20, I think I already answered that. Brett, a few days ago, I heard the first 10K of disaster loan would be forgivable, but now hearing that it is only true if you get the PPP loan. What do you know about that? So the 10K, the advance, the 10K advance is forgivable. If you, like imagine the PPP doesn't even exist. If you get the 10K advance, that's forgivable. If you get the PPP, then the amount that they do for the loan forgiveness ends up, like, you'll end up subtract. Can you hold on a second? Stephanie. Happy hour around here again. Gets loud. All right. Where was I at? Oh, so if you end up getting the PP, let's use an example. You got the disaster loan, you took the advance for $10,000. You qualify for $40,000 for the PPP. You do everything right, you get it forgiven. They will subtract the $10,000 that you got in the EIDL advance from the loan forgiveness. The thing that is, there was some very specific language in here. I'm going to reread it again just because I think it's important for people. Let me see if I can find it real quick about the EIDL. I did this at the beginning, so if I can't find it quickly, then I'll go watch the first part of this. But let me see if I can find it. I'm not finding it. There's specific language in here that if you have already gotten the EIDL, that like if they already gave you money and you used the money for payroll, then you're going to have to refinance the EIDL money into the PPP. If you got the EIDL and you did not use it for payroll, it does not preclude you from PPP, and you do not need to refinance. So that's why I'm telling people, if you get the EIDL, there are very few people that I know that have actually gotten the EIDL, like the real loan money. So if you get it, just don't use it for anything that you're going to use the PPP for. With the advance, if you've already gotten it, it's fine. You can still get the PPP, but you'll just subtract whatever you got in the advance from what ends up getting forgiven. Ross Crane, what's up, brother? Let's see, Cynthia, do you know on the PPP application, is the half of the 2.5 payroll for rent, mortgage, utilities, etc., since there is no line for those expenses? Do you know on the PPP application, is the 1/2 of the 2.5 payroll? I don't know. I only looked at the application when it first came out, so I'm not real sure on the but when you're when you're calculating the average monthly payroll amount and multiplying it by 2.5, you do not use your rent, mortgage, utilities, etc. in that calculation. It's only for payroll costs that you're going to come up with your average monthly payroll and then multiply it by 2.5. Steve, what about a new business that started in January 2020 in terms of the documentation for the PPP? So you're going to bring any payroll costs you have had since you started. So January and February of this year, you're going to have the exact same documentation as everybody else. It'll just be from January, February this year, and you'll divide it by 2 or however many. Maybe they'll divide it by weeks to come up with what your average monthly payroll expense is. Matt, what's going on, man? Aaron Ducat, can I rehire back a part-time employee who hasn't been on payroll since 12/31? maybe, I don't know. Like the thing that they're wanting to do is basically keep everybody in on 215. So I don't know. I mean, probably I would guess. I mean, the whole point is that they want people to like get back on a payroll. So I can't imagine it would be the end of the world. The way I'm reading it is that when you go for the loan forgiveness, that they're going to be, I don't know if they're going to look at it as specifically as I thought they were going to look at it. People are always asking me like, well, you know, I have 2 employees in February, Mary and Susan. I want to get rid of Mary and I want to replace Mary with Paul. And then I got Paul and Susan. Will that count? In the past, I used to say, no, I don't think it'll count, because they want Mary to stay employed and they want Mary to keep making what she was making. But now it just seems, I'm telling you, like I have been saying this, that I feel like it's been kind of the Wild West from the beginning. I feel like there's going to be some real loose rules that are going to be open to interpretation at like individual banks. So that one, I don't know. People ask me a lot about like, well, what about if I hired somebody on after 215? That I don't know. So it looks like they're going to take the payroll, the average monthly payroll cost is going to be something in the, I think it's going to be the 12 months prior to your application date. At least that's what this thing said. So I used to, like on Wednesday, it sounded like it was going to be the 2019 payroll. So like I'm saying, just bring in everything from the January 1st, 2019 to the day you apply and take your shot. Brett, you're a good human. Thanks, bro. No problem. Jamie West, Jake Filkins, 2 of my favorites are on here. Steve, thank you again, Dr. Nick. You're welcome. Thanks for all your help on this. You're welcome. Anybody have any other specific questions? I have to go do shopping at the grocery store before it gets too late, but I'm happy to help. But if you guys basically, like, I just read that 30-page document from Treasury, which I put up, I put in here in the chat, and then I also posted it on the Dr. Nick page. So if you guys want to know what I know, read that, because that's all I do. Is I started by reading the bill, I read the thing they put out on Wednesday, and I read this thing tonight. And that's pretty much, if you think that I know what I'm talking about with this stuff, it's literally just from reading these documents that the government puts out, because that's going to be what they know. Your banker probably hasn't read that. Your CPA that is so smart probably hasn't read that. So just be sure that you are you're staying informed, and I'll help out however I can. I'll answer questions, but again, like, my opinion doesn't really mean anything either. It's SBA's that matters. They still asking for 2019 tax. That we've been, Seth, go back and watch this, because we've been talking a lot about that, but it's unclear still. Like, they put out this document and it's still unclear on what the documentation should be. So, all right, guys. Well, I got to go brave the grocery store and hopefully not get mugged by anybody on the way to my car. Downtown Chicago gets a little desolate at night, and the crazies get extra crazy. So if I don't have any lives tomorrow, I may actually be dead. So wish me good luck. So talk to you guys later.